Stocks, the holy grail for passive income, right? Well, no. In fact, stocks provide a terrible source of passive income. I have all the details and the full explanation for you right here in the video. Let's get right into it. All right, so first off, I do completely recognize I'm probably going to get a lot of pushback down in the comments section in regards to stock investing and passive income. However, that's totally fine, but hear me out on this because there actually are much better ways to invest your money where you can get a much better return on your money and return on investment rather than piling dump truck loads full of cash into the stock market to get a teeny tiny 3% return. So let's get into it and discuss all the details on this. All right, so here's the problem. Many people determine investing in stocks as actual passive income. Not really. Investing in stocks actually provides investment income. Let me give you a quick example. You buy a stock at $10, you sell it at $15. You net a $5 per share capital gains. In other words, investment income. However, there's a different piece of the puzzle here that we want to talk about, which is passive income. And yes, stocks do provide passive income. However, you do need to have tons and tons of money to actually get any kind of reasonable return when it comes to passive income out of the stock market. So we're going to be focusing on that in the video, and I do want to lay it out for you because there are much better ways out there where you can get way better returns on your money versus piling a ton of money into the stock market. So let's get right into this. All right, so here's what the problem is. When you invest in stocks, virtually the only way that you can get passive income out of stocks is by investing in dividend-paying stocks. Dividends typically are distributed on a quarterly basis, and usually it is sent out based on the earnings and whatever that company has determined as the dividend going out. And sometimes it is either bumped up, or sometimes it stays the same, or even sometimes the dividend is lowered. As a result of that, you got to continue to watch how much is the company paying as far as a dividend. Because here's the thing, it could be a 0.5%, it could be 0.25%, it could be 1, 2, even maybe 3, 4, even 5 or 6%. Dividends are all across the board, but here's the thing. As these are distributed on a quarterly basis, you're getting money that is either sent to you in the form of a check or a direct deposit, or maybe even you have your dividends reinvested. Again, that's totally fine too. This would be determined as the passive income from stock investing. Great, but here's the problem behind it. In order to get any type of, say, reasonable return from passive stock and dividend investing, you need to have a lot of money. Let me give you this into perspective here. Let's just say that you invest $100,000 into a dividend-paying stock that pays 3% on an annualized basis. Well, they're going to distribute that 3% over the course of 4 quarterly payments, which actually breaks down into $750 per quarter or $250 each and every month, right? So at the end of the day, when you invested your $100,000, you're essentially getting 3% back each and every year in the form of dividend payments. Is that very much? Well, again, you can decide that on your own, but to me, 3% on $100,000 invested doesn't really seem to make sense. You got to put up a ton of capital in order to get a 3% return, which, by the way, which many people don't tell you about this is, let's just say that you buy $100,000 worth of that stock at, say, $10 a share, and it's paying a 3% dividend. What happens if the stock price drops down to, say, $9 a share or, say, $8 a share? Well, now you've just lost $10,000 or $20,000 of your capital of the $100,000, but meanwhile, you're still getting a 3%, or actually a little bit more than that because the dividend is a percentage, and therefore it may be a little bit more of a percent as the stock price adjusts. So I guess let me ask you, does that really make sense? You're subjecting yourself to price action and potential declines in the stock price to go after a 3% dividend. I don't know. It seems kind of weird to me, right? But at the end of the day, remember this as well. Inflation as of right now is about 8.5%. So yes, you have $100,000 invested where you're getting 3% back on your money, but yet you're losing 5.5% to inflation. Again, does it make any sense? Not to me, it doesn't. And let me throw this one in there as well as the little kicker. Any of this dividend investment income that you're getting as passive income, guess what? If it's not reinvested, guess what you're doing with it? You've got to pay capital gains tax on that money, right? So you're taxed on the dividend that you're receiving. So once again, you're getting money as a result of $100,000 that you have invested, 3%, you're getting that money and now you're paying taxes on it and you're losing 5.5% to inflation. Again, does this make a whole lot of sense? It takes a ton of capital up front to actually invest in stocks to get a little bit of a return on your money. I don't know. To me, that simply doesn't make a whole lot of sense. And honestly, it's not even feasible for a lot of people because the vast majority of people out there do not have an extra $100,000 laying around to invest into a 3% dividend paying stock. Now, again, I do completely recognize you could put $100,000 in and maybe, just maybe, the $10 stock that you bought $100,000 worth goes up to $15 or maybe even $20 per share, whereas you just gained 50% or possibly even 100% on your money. I totally get it. But you're also facing that risk of potentially maybe the stock price goes down and you lose your initial capital. At the end of the day, if you do make a good purchase and you do buy a stock at a reasonably good price and you do have a bunch of extra cash laying around and the stock price does go up, again, making the scenario for the best of all the worlds, the stock price goes up, you get capital gains on it, and of course you're collecting your 3% dividend or the dividend that's probably adjusted higher as you go, then of course this would be the best of all the worlds. Price appreciation plus cash flow along the way in the form of passive income, right? So anyway, you've probably seen the videos out there, you possibly read the articles, you possibly seen the headlines about how passive stock investing is the best investment for everyone. No, actually it's not. Again, everybody has their varying opinions on this, and that's totally fine. I'm sharing with you my opinion on this, and I don't think passive stock investing is all that reasonable for the vast majority of people because it takes a huge lump sum amount of cash up front to get investing in stocks and to actually get a little bit of return on your money versus somebody who maybe has, maybe $100 a month to invest, maybe $1,000 a year, maybe $500 every quarter, something like this to invest. And if you're still getting a 3% dividend on, say, $100 or maybe $500 or $1,000 or maybe, let's just say maybe $5,000 a year, it's still not that much. It's not going to bring you from maybe a point where you're struggling on an ongoing monthly basis to maybe bringing you financially free. It's just not going to do that unless, of course, the caveat is you do this over very long periods of time. But again, here's the problem with that. People need money now. We don't have 10, 15, 20, 30 years to wait just so that we can continue investing, $1,000 a quarter, $5,000 a year, or whatever happens to be into dividend paying stocks. So then 30 years from now, we can start to get $5,000 a month from passive income just from our dividends, which by the way, if you're getting $5,000 a month from dividend paying stocks, you probably have hundreds of thousands, maybe even $1 million or more invested into the stock market in order to get $5,000 a month from dividends. So again, there's many other ways out there that you could be investing money, which by the way, I'm going to throw this out there as well. This is not investing advice. This is not financial advice. This is not accounting advice. This is not advice in any way, shape, or form. I don't know your situation. Everybody's situation is very, very different. Therefore, I cannot advise you. I'm simply sharing with you my opinions. Don't get me wrong. I'd love the stock market. I've been watching the stock market very, very closely every single day for about 14 years, every single day. So I love it. I watch the stock market very closely. I do engage in the stock market from time to time, but I also do recognize at the same time, what I'm doing in the stock market is completely speculative. It is not investing for dividends, and it is certainly not investing for passive income. It's more like playing. Is basically what I look at it as, right? Because it's just like going to Vegas, right? You have a good time, and at any given point, the dealer could reach across the table, take all your chips, and you're done. Game over. Sorry, you lose. No fun anymore, right? Just like that. That's how I view the stock market because it is a great vehicle for building wealth relatively quickly. But at the same time, in order to build wealth relatively quickly through playing on the stock market, you also got to subject yourself to a ton of risk, right? So the risk is also equal to the reward. As in, in order to get a big reward, you also got to subject yourself to a big amount of risk. So again, just keep that in mind if you start playing around with the stock market. But what I would encourage you to do, if you're looking for passive income, start looking around for other sources. Don't get me wrong. If you want to start throwing in maybe $100 a week, $100 a month, maybe $1,000 a quarter, $500 a quarter, $1,000 a year, whatever it happens to be, I would say this much. Do your research, do your due diligence, look into companies. But here's the thing. If you're going to start investing in stocks and you plan on holding them long-term versus short-term trades, because here's one more thing I want to throw out there as well. If you're going to get into the stock market and start trading on a short-term basis, I bet no one has told you short-term capital gains. It's about 50 to 60%. So just keep that in mind as well. If you happen to start short-term trading and you happen to get really good and you happen to get pretty lucky and start making a bunch of money, just remember, the IRS is going to be coming for about 50 to 60% of that. So just keep that in mind. Just another quick little side note. But if you want to start investing in stocks, here's the thing that I would say. Check out dividend-paying stocks. So at least you're getting something along the way. You're getting paid for actually investing. You're getting paid for putting your money somewhere versus only strictly relying on the price action of that stock. But remember as well, some stocks out there can appreciate in value very, very rapidly. We all know the companies out there like Tesla and a variety of others out there that are all over the board that are very volatile, but at the same time also have very significant upside at the same time. So just take that into consideration. But if you're looking for long-term investments, you may want to look at some dividend-paying companies as well. So at least along the way, hopefully you are benefiting from price appreciation. At the same time, you're also getting paid for your time, for your effort, and of course, for your investment. It may be a little bit, but you know what? At least it is better than absolutely nothing. But at the end of the day, if you're looking for financial freedom, I'm going to be honest with you. Investing in dividend-paying stocks may not be the answer. There are many other forms of passive income out there that you can come across that'll pay you 7, 10, 15, 20%, or possibly even more than that versus a little 3% dividend, something like that. But again, you got to do your own due diligence, do your own research. And again, this is not investing advice. This is not financial advice in any way, shape, or form, but rather, hopefully, this will bring you a little bit more clarity on some actual information in regards to stock investing, as well as passive income generated by stocks. And of course, hopefully it gets you thinking a little bit more about passive income and the potential that it actually has for you. So anyway, hope you enjoyed this. Make sure to subscribe down below if you haven't done so yet. Share this video with your friends, family, social media, and go back and check out any of the other thousands of videos right here on the channel. I want to help you out in any way that I possibly can, as well as share my experience, my expertise, my knowledge, my anything that I have to share with you right here in these videos. So again, thanks so much. Make sure to subscribe down below. Enjoy your day, and I'll catch you